What's going on, guys? 360 Digital Closing Wheel Daily Energy Market Summary here on this gorgeous October 5th, 2020. Episode 131 to start on this Monday. We're live, not really, on YouTube from an undisclosed location here in Denver, Colorado. A little inside business. This is the third time we've had to shoot this. We're having live stream issues, folks, so I'm really sorry. So we are not live on YouTube from an undisclosed location here in Denver, Colorado. But I am joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oil and gas 360.com, Stuart Turley. I think I've said this enough now. How are you doing today?
It's a beautiful day in the neighborhood, and I feel like I'm on Bill Murray's Groundhog Day.
I got massive deja vu, but guys, we have a great show for you lined up today. Exxon gets caught, not really gets caught, but their internal ESG plans, as we call it, or their emissions plans get leaked. That's funny. Tropical Storm Delta preparations begin for both BP and Occidental. CalFrac drops another letter to its shareholders. We have a nice little article we dropped on the news desk with Inveris covering some of the corporate mergers that have been happening. Stu's got some interesting stuff in the international news. We'll cover everything in the stock market. But first, guys, just subscribe. 360 Digital Closing, iTunes, Spotify, YouTube, the best way to stay up to date on all of your energy finance stuff. Where else can you hear about the struggles of trying to live stream on YouTube while also getting all of your energy finances? No better place. And as we move into the markets today, a couple things that I see. Well, one, as we mentioned, Trump had coronavirus on Friday. Very convenient that, right? Markets kind of tanking on Friday. He comes down with coronavirus, and then all of a sudden, this weekend, he gets miraculously better, and it gets released today. And markets are up 1.8 percentage points in terms of SPY, 2.2 percentage points if you're a tech stockholder, and about 1.68 percentage points if you're a Dow Jones holder. So, interesting little pump strategy there. And part of the reason why this is up is someone who is older. Trump doesn't look like he's in the best of shape. He was somebody that was at risk very heavily to be for coronavirus. And if he's able to get over it quickly, markets love that because that means things are going to reopen. The economy is going to continue to get pushed. There was also some good stimulus talks today between Secretary of Treasury Steve Mnuchin and House Speaker Nancy Pelosi. Looks like there's going to be something come down next this week, and there probably is going to be some direct payments. Crude oil loved this coronavirus Trump news. Up $2.30. That's about 6.5 percentage points. 39.37. Back end of the curve. 42.04. That's about $2 even for the 12 months. So about 5 percentage points. So even the long-term traders loved this news right here. Love this news. Natural gas had itself a day. 8.5 percentage points. Up to $2.63. Maybe these experts are right, Stu. Maybe we will see 350 gas. 12 back into the curve. Only up about 4.5 percentage points, $3.13. XOP was our E&P securities contract, 43.49. That's about 4.5 percentage points. The upside. OIH, which is oil field services, $100, even at 13 cents at $3.38 on the upside, about $3 or 3.5 percentage points on the upside. In terms of our equities, downside, Permanent Rock Royalty Trust, a little ETF, get your hands on $1.74. It's about 6.5 percentage points on the downside. Peabody Energy, $2.18, down 8.5 percentage points. And Lone Star Resources down 12.5 percentage points after being up the past 2 days off Chapter 11 bankruptcy, finally settling down about 27 cents. On the upside, Gulfport Energy, we covered them in our long-form podcast this morning, in a precarious situation with a lot of their debt distributions and the way their redeterminations could come down this fall. 53 cents, they're up 14 percentage points, so got to be some good numbers leading there. High Point Resources, just great website. Stellar, if I do say so myself. 24 cents, up 17.5 percentage points. Camber Energy, they're up 35 percentage points. Good stock. Good if you're a stockholder of them. They're up to 78 cents. For the third and hopefully final time, Stu, what's on the international news desk today?
Hey, we got a barrel of stuff going on here. Hey, first one, 6 Norway oil and gas fields cut as strike escalates. Right now they've cut, Michael, 8% or 330,000 barrels of equivalent. Here we are. We got a little question for the guys that are striking. Union bosses are laying a bunch of people off. Why are you asking for more wages? Just thought I'd check. We love.
Yeah, it's pretty interesting. Everyone's getting laid off around the world. You come and asking for. I don't know. Hey, good for them. Clearly, there's a reason for it, and maybe they do need a raise. Maybe they're underpaid in Norway.
I don't know, but we love our Norway listeners. We are stacked with Norway clients. Hey, another one, Turkey is expanding their gas hunting in the Mediterranean. This is big news. They are doubling their rig equipment. They just bought their second ship. So here it is. Turkey is doubling their numbers in exploration equipment. So it's important because Libya is pumping out the oil, which is driving OPEC nuts. And here's Turkey doubling their information. Okay.
ExxonMobil, I saw cutting 1,600 jobs across Europe.
1,600 across Europe. It's kind of interesting because ExxonMobil is also going through the green. All of these jobs are in the natural gas or in that area. So they're believing that they will not be working very much longer in oil and in fossil fuels. Pretty silly. Okay. Also, op-ed on $1 billion of divestitures. This one we talked about it ad nauseum on our podcast. So our podcast is really fun. Everybody needs to listen to it because it had great information. And it was allowed. Think about it.
I talk fast now. Someone commented on our last YouTube page, I talk too fast. Well, one, that's part of the shtick. Two, if you think I talk fast now, listen to the podcast.
So that's right. Wait till number 3. Okay, here we go.
I talk too fast. What?
I just killed that story. We're moving right along. Okay, this morning on the podcast, we did talk about the EU is putting out with MiFID II. A while ago, they put the financial regulations out years ago. MiFID II found its way across the pond. And our investment communities started having to hang on to MiFID II. Here, if you're a podcast listener, we're taking a look at the high resolution graphics here. MiFID II, this is Oil and Gas 360.
Should be on a pitch deck. It's got to be on a pitch deck somewhere.
All right, here's the next level right here. It is ESG in the EU. If you don't know ESG, you ain't got ESG, you're going to have access to capital. Here's the catch. You and I are all over this story from the standpoint that standards are not there. And so we're launching our ESG dashboard, and we're going to have to make sure we're spot on trying to figure out how to compare peers within the investment community. So hang on to your flight suit because we're going to be covering that story big time.
Talking about put on a flight suit. Holy smokes.
Yeah, I got 3 more stories, but whoops, Groundhog Day just went away. Okay.
Hey, that's fine because third time's a charm. When we look at the U.S. shale patch, couple things here. First off, Tropical Storm Delta preparations are beginning. That the Louisiana coast is getting absolutely pounded. October 5th, producers began shutting. BP began securing all of its offshore facilities, specifically Thunder Horse, Atlantis, Mad Dog, and the Nayakea platforms. Expected to move through southeastern Gulf of Mexico Tuesday night, be over south central Gulf of Mexico sometimes Wednesday. That's according to the most recent advisory from the National Hurricane Center on October 5th. Remember, offshore Gulf of Mexico does about 1.9 million barrels a day. Biggest impact looks like it's going to be the refineries, but the 2 refineries that are right in the way, the Lake Charles facilities, they're still offline for the Hurricane Laura. So talking about going back 2-3 hurricanes, they're still off because of power issues that are coming in there. So we'll be covering all of that. Hearts go out to anybody in Louisiana, and you'll be keeping our thoughts. Quickly, CalFrac came out and basically they're still against this Wilkes Brothers deal. Like, go check out and read the art and read the shareholder note they put on the news desk. It'd be interesting. I mean, what it comes down to from our end, folks, is the reason why they don't want Wilkes Brothers to come in and take over is they're going to lose their job. Clearly, there's a management change that is meant to be in effect, especially if Wilkes Brothers come in. So that's really where the argument is. Normally, you see a lot of these mergers or a lot of these takeovers happen, because the management team is going to stay in place. Well, not really going to happen. If this gets approved by the shareholders, that management team is whoop. So that's why they don't want it. Also on the news desk, Inveris is a nice little, not an exclusive article, but a really good article by our boy Andrew Dittmer over there. Merger and acquisitions were boosted by a lot of these corporate, not takeovers, but these corporate mergers have really set the stage for what they think is going to be a really crazy Q3, Q4 merger and acquisition season. So highly recommend reading that. We're trying to run him down for a little long interview on that. Exxon also got their quote unquote emissions data released today. It really wasn't their emissions data. It was mostly their 7-year plan that was enacted by Darren Woods when he took over in 2018. It was a 7-year plan ending in 2025. Really called for the doubling or called for the it was like another 1 million or 1.2 million barrels of oil and gas production out of ExxonMobil. So woohoo, we like that, especially in light of what the other IOCs are doing. But the way it was framed was they also in that showed their emissions increase, and their emissions increase was supposed to increase the size of a small country. They don't tell you what that country is, so we'll just say small country. That's what the ESG folks loved in that. So gotta love this internal employee leak in this, Stu. Would you leak internal documents?
Heck no. I don't have the money to defend myself.
Yeah, me either. Hey, it's whistleblower status, Stu. Whistleblower status.
Yeah, right.
We missing anything today? Second, third time around, I think we've covered everything.
For the third time, we missed the Chevron Noble finalization. They finalized it. They got it approved.
Yeah, over the weekend, yeah, the shareholders finally approved. There we go.
Yeah, and you know why, don't you? It's a good deal.
It's the Mediterranean.
It's a Mediterranean. It's a good deal, and they didn't want anybody snapping that out under them.
We know you're a fan of that deal, but I think with that, guys, we're gonna finally let you get back to work. We're 40 minutes late. Holy smokes! You can blame me, people. I don't get what's going on with Wirecast here, our little software. So we'll figure it out, and we will be back with you tomorrow, live on YouTube from an undisclosed location in Denver, Colorado, for our daily energy markets. Thank you for checking us out. Again, we will see you tomorrow. The Digital Ticket.